Okay, let's get started. Anyone logging on after this will just miss my introduction, which really won't be the end of the world. So welcome everybody on this slightly bleak morning to another in our enterprise series. And this morning we're here to talk about navigating HMRC's R&D crackdown. There are quite a few familiar names on the delegate list, and most of you probably are familiar with who we are and may well be clients. But for those of you who aren't, MKS is a top 15 audit, tax and advisory firm. We work with entrepreneurial clients across lots and lots of different sectors, as well as lots of not-for-profit clients and private clients as well. We're also part of More Global, which is an international network with presence in sort of most major cities across the world. So very well placed to help clients with their international development needs as well. So today's session is going to focus on how organisations have been experiencing increased scrutiny from HMRC when submitting their R&D tax relief claims, something that probably a few years ago seemed quite an easy thing to do. Now, unfortunately, is attracting much more attention. HMRC are requiring much more additional information to file those R&D claims and are increasingly likely to initiate an inquiry to ensure the validity and accuracy of the claim before approving it. We have a 10-strong R&D tax team at MKS, all of who are technical specialists and are supported by other tax professionals as well. And this morning we have one of those expert tax and another R&D specialists on our panel who are going to be discussing what they're seeing and how to mitigate some of the risks associated with making a claim in this current climate. So I'm delighted to be joined by David Byrne, who is one of our R&D directors. David supports innovative businesses and helps them to secure the government funding that they are entitled to. And David's technical knowledge and project experience and communication skills ensure that all of the stakeholders are engaged in the process and that claim methodologies are tailored towards an organisation's needs to maximise any claim they can make. And John Hood is one of our tax partners, and he is Moore Kingston Smith's tax dispute resolution specialist. He's an expert at dealing with complex and serious tax investigations launched by HMRC, settling matters on a civil basis. So I'm going to do some light chairing. Don't worry, it's going to be John and David. They're going to be talking tax, not me. But before I kick off, a little bit of housekeeping. Please do ask questions. It's much more interesting if you ask questions. This webinar is for you. So for you to get the most out of it, please pop any questions that you have into the Q&A function, not the chat function, but the Q&A, much easier to keep track of them there. And I will try and weave those questions into the panel discussion as we go. And any questions at the end that are unanswered, we'll get back to you privately. The session is being recorded, so please do share this with any peers or anyone else who you might think is interested who haven't been able to make it this morning. And enjoy. So David, we're going to kick off with a question for you. I mean, tell me a little bit about the current R&D environment. We see that HMRC have been cracking down on claims. Could you just give us a little bit of sort of context around what's really going on here?
Certainly, yes, and good morning, everyone. As you say, a number of years ago, R&D was seen as an incentive, and the government wanted companies to make it, and HMRC were very supportive of companies making claims. And against a very benign environment, as the claims generosity increased, more and more companies started making claims, but it also attracted a number of claimants who probably didn't necessarily meet the needs of the R&D scheme. And so, coupled with a number of quite aggressive advisors, the scheme has sort of fallen into a bit of disrepute. HMRC themselves have been conducting a number of exercises to try and identify the level of what they call non-compliant claims, we might say fraud and abuse, that's been seen in the claims. And they've concluded that maybe 24% of claims weren't compliant. And as a consequence of that, they recognise that they need to go back and scrutinise claims much more thoroughly. And as a consequence of that, this is the crackdown that we're seeing at the moment is the result of that. What we should probably think of it as not necessarily a temporal thing, though. It's sort of something that they're just doing for a couple of years and then it'll move on. I think it's probably evidence that HMRC, they're setting in place the infrastructure now. So this is the new normal, as it were. So companies should be expecting to have this level of scrutiny for the foreseeable future. And as a consequence, not just because of all the changes that are going on in the broader R&D regime, the new merge scheme and whatever, but companies should be spending a little bit more time preparing claims and supporting claims and certainly capturing the evidence that they'll need in order to defend a claim going forward. I mentioned that the claims had increased. I mean, the latest statistics show that it had gone up 11% in the last year alone. So there's about 90,000 companies making claims, 7.5 billion of benefit going out. And naturally, that's a consequence of not just the lax environment that HMRC have seen, but also the scheme has been for a while becoming more and more generous. And as I say, that was attracting those bad actors which have brought the scheme into disrepute. The HMRC, as I say, they've invested more people in to scrutinise claims. We now have 200 more additional officers that are scrutinising the claims, and 20% of claims are now subject to a compliance check. So as I say, if you haven't had a claim that's already been scrutinised by HMRC, you should probably anticipate that one is coming forward. HMRC are responding to this new environment in a number of different ways. Sometimes claims are done on a random basis, but more often now they're requesting or they're mandating that clients provide information to support the claim when they submit it through a digital portal, and then they're using that for more risk-based profiling of claims, sometimes based on sector, sometimes based on maybe their own benchmarking, or that you also have to declare the agent that's helping you with your claim. So there's a number of different factors that HMRC are using to drive some risk-based assessments. Yeah.
So a few spoiling it for the many then, those that have abused claims and pushed things too far. Absolutely,
and interested students may see that there's been a number of articles, not just in the national press. The FT has run articles as well as the Times, but also some of the professional bodies, the CIOT and the like. They've had a number of issues where obviously genuine claimants are being caught up in this crackdown and subject to quite lengthy, quite onerous inquiries, even where it's relatively clear that R&D is being conducted. But the professional bodies and a number of different advisory organisations are also flagging areas where HMRC themselves aren't necessarily following their own rules in terms of how they process claims. So that's causing some pressures and issues at the moment. One would hope that these are teething problems as the new environment, the new rulebook beds in. But clearly, there are a number of companies that are having severe difficulties at the moment in supporting claims.
Got a couple of questions come in. Somebody's asked, is this additional scrutiny being applied to retrospective claims, or is it mainly geared towards new ones?
It is, unfortunately, so that it's sort of, there's an old saying, sort of, when the tide goes out, you see who's been wearing trunks, and that's what's happened here. Sort of because HMRC have suddenly turned the tap, as it were, on issuing claims, on scrutinising claims that were, say, submitted under that more benign environment or landscape that they'd anticipated maybe a year ago or 18 months ago. They're suddenly being caught in the scrutiny, and the level of support that claims that HMRC are looking for hasn't been there. So certainly it applies to historic claims. Also, what we've seen in where we've helped some companies who've got into these sorts of difficulties, HMRC have been quite aggressive in the sense of, well, saying, well, if your most recent couple of years' claims have been maybe found to have some issues with them, we're going to open discovery assessments, maybe to look back at claims from 5-6 years ago and see whether they've also got this pattern of behaviour. And I know John, with his tax controversy and dispute resolution, can talk about that in more detail. But it is something that we're seeing from an increasingly sort of belligerent HMRC. Yeah.
I mean, somebody's asked, does this suggest it might be better not to apply for R&D going forward? I suppose it depends how aggressive you've been in the past, isn't it?
If you're doing the R&D, then you should make the claim. It's a really valuable incentive. I know for different companies that the rates have reduced, but it is a genuinely generous incentive scheme, and we're all, you know, stakeholders in the UK economy. We all recognise the need for growth, and the R&D scheme is one of the government's flagship policies to encourage that growth and innovation in the economy. So we want companies to innovate. I think what we're saying is that in order to get access to the credits, etc., you need to do the appropriate due diligence. The sort of the free money that was advertised a while ago, that's no longer there. You do need to prepare for the claim. It's not necessarily an onerous level of investment that you need in terms of to prepare and support a claim. There's a lot of information that you'll already be capturing as part of your R&D processes. It's just a matter of presenting that clearly and robustly through to HMRC. That there's no reason why you can't be efficient in it, but in preparing a claim. But if you're doing R&D, you should be taking advantage of the scheme.
Yeah, no, I would have said so. And somebody's asked, how far back can HMRC go to review historic claims?
I'll probably defer to John here, but I know in some examples they've gone back 6 years.
6 years, yeah.
Claims. Yeah.
Is that
John? Yeah, I mean the normal time limits are 4 years where there's maybe a technical issue, 6 years if they consider someone may have been careless, and they can go back up to 20 years if they consider that someone had deliberately been claiming something they were not entitled to. But obviously that's quite rare. But nonetheless, you know, we have not MKS, but I've seen examples where HMRC have done that. But obviously they have to justify that action. It's not, oh well, we're exposed forever if we've made a claim. You know, HMRC have to demonstrate that there was some kind of deliberate behaviour or that someone was careless. But yeah, they can go backwards and forwards. So if they open one particular tax return up for a review of the R&D, they can also look at future years and also earlier years. So that's one of the reasons why we say you should always be very careful when you can cooperate with them. Cooperate absolutely, but don't volunteer information which may not be relevant.
And is this why, I mean, somebody's asked, is this kind of all part of why claims generally are just taking longer to process the current claims this year, because they're just looking at presumably everything a lot more closely than they otherwise would have done?
I suspect it's a combination of a number of factors. Certainly there's a lot more inquiries taking place, compliance checks taking place. As I said, 20% of claims. You do the maths. If there's 90,000 claims a year, that's 20,000-ish in compliance checks going on. So if each individual officer is doing maybe 50 or 60 checks, you can imagine that they're having to juggle a lot of activities. So things naturally do take time. I think it's also a factor that HMRC, because they've brought in these new teams and they're applying some new processes themselves, they're taking the time to bed in, and certainly some of the long rounds of correspondence that we're seeing are probably unnecessary, but they're more a factor of HMRC not understanding the environment, either the R&D regime or companies who are performing R&D, and certainly not understanding necessarily some of the normal procedures for handling claims, and that's causing a lot of delays. We're starting to see that relax a little bit, certainly when some of the first wave of the bulk compliance claims were coming through. HMRC themselves were reluctant to engage individually, say with a meeting with a HM officer. It was often through email only, and often through anonymized emails as well, so you didn't get an individual, and so there's a lot of pick up and put down time as different inspectors looked at individual claims. But generally at the moment claims are being scrutinized heavily. Hopefully in future it'll become a little bit more efficient in terms of how HMRC were doing it, but at the moment they are taking quite a long time.
And somebody's asked what are the typical reasons why they might feel a claim would be invalid? What sort of thing might trigger?
A number of different factors. Sometimes, you know, your name gets pulled out of the hat and you're just unlucky, but more often than not, now HMRC, as I say, that they're now requesting data or mandating data when you submit a claim. That's giving them some information that will drive some risk-based profiling that they're doing on. So there's some well-reported cases of claims within particular sectors, care homes, etc., that are heavily targeted and naturally a consequence of claims. HMRC, they've obviously been helping or assessing claims for the last 20 years or so now. So they've got some relatively robust benchmarks of what they might expect to see within certain industries and certain companies of certain sizes. And if you're an outlier from that may trigger profile. I dare say that one of the questions, as I mentioned, that you need to provide now is if you've been helped from a particular advisor or an agent preparing the claim, and maybe that's being used as an attack vector, as it were, from HMRC to try and target some of the advisors that HMRC know have been a bit optimistic, shall we say, with claims and sort of pushing the envelope and maybe have got sort of unsavoury business practices, maybe contingent-based fees or success-based fees, which they... Sorry, I didn't catch that.
We are not one of those.
Oh, absolutely not. You know, we've been NKS has been around for 100 years, and so sort of we're a trusted advisor. We're here for the long term. We already know of a number of advisors who have fallen out of the market because they can't handle the degree of scrutiny and the level of support you need to provide clients as they defend claims.
Yeah, I think it's worth highlighting that there's two types of inquiry. One is where they're challenging whether or not there has been any R&D, and that's a kind of binary point. You know, has there been an R&D? Yes. Okay, so is the amount they've claimed correct? And then there are other cases where HMRC are looking at a more technical level and saying, well, is the R&D claim technically correct, because are the expenses correct? So, you know, you may be selected simply because they're just trying to make sure that the claim is for the right amount, whereas, as David mentioned, where they feel that you might be in an industry which wouldn't normally qualify, then it is very much a question of, has there actually been any R&D? But again, you can normally find that out pretty early on with HMRC. You obviously have to, as I mentioned earlier, you have to cooperate with them. But, you know, once you've given them information, you're perfectly within your rights to say to them, well, you know, what's triggered this inquiry? So that we can work with you to resolve it. So there's certain things we can do when they do start an inquiry or a compliance check to find out what the real source of what risks they've identified, and then try and resolve them as best we can, as quickly as we can, because obviously one of our key roles is to minimise the disruption for you in terms of, you know, time, cost, and effort.
So how do HMRC sort of go about conducting these inquiries? If you were to get an inquiry letter, what actually happens?
Well,
what's the next
step? Go ahead, John.
They use their normal inquiry powers to look at the tax return, and that means there are certain safeguards that apply, which is good news for us, which we obviously would look at. So normally they'd issue a letter saying that they're inquiring into the tax return, which year it relates to, and then they send a list of information they're required to check the return. Now they can also use their discovery powers, which is where they issue a notice saying, well, we'll want some information for you. This is where they can't open an inquiry because that year's the 12-month window is closed. And then they can ask for information to to see whether or not that an earlier return was correct or not. Those are the two main routes that they'll use. That we have also seen, and David and I were talking about this yesterday, where in very rare circumstances where HMRC use their power to correct obvious errors in returns by basically saying, well, you know, we can't understand why you made an R&D claim, so we're just going to basically amend your return to remove the R&D claim, and then you have to appeal against that amendment. Now that's quite a heavy-handed approach, because effectively you don't get a chance to make your case initially. HMRC just turn around and say to you, well, you know, we've amended the return, we've taken out the R&D claim, and this is what the revised corporation tax position is. So it's really, you know, that is quite rare, but we have seen that as well. So it is the normal process for investigating a tax return, but again, it does, because of the specialisms of R&D, you have to make sure that you deal with it in a well organized, and you get your strategy right up front to make sure that you minimize the disruption, also your exposure.
And what, I mean, presumably we need to give HMRC the evidence they're asking for, but what sort of, somebody's asked, you know, what sort of evidence is sufficient for them? Have HMRC actually articulated this? Because they said that some of the documentation they put out suggests that they don't need extra records. And somebody else has sort of asked the question, what if the advisor that helped you with the claim initially is no longer around? That then, you know, what are you meant to do?
Call MKS. And to be fair, we often end up supporting claims prepared by other advisors. So obviously it'll depend on your contract with the advisor, etc. But if they're no longer around, then I would look for a trusted advisor to help you going forward. It can be a bit of a minefield. I don't want to over egg it, but it can be difficult. And whilst I wouldn't panic, I would certainly get some advice on terms of how you might move forward. As John says, that there are a number of different sort of reasons that HMRC will launch a compliance check. Some of them may focus on the technological characteristics of the claim, of the projects that you're claiming for. And therefore they'll put an emphasis there on what they call a competent professional, sort of someone who's got knowledge and experience of in the field, and who's got the sort of wherewithal, that knows the definition of R&D for tax purposes, can make the distinction between what is R&D for tax purposes and what are the routine or the non-technical projects. So it will depend on the nature of the questions that HMRC are asking, but certainly if a company hasn't got an advisor, I'd recommend that they speak to one, or they speak to HMRC. I mean, obviously you don't have to have an advisor to respond to a claim, but I would talk to someone, HMRC if no one else, but certainly try and get some independent advice.
I mean, there's a few, there's lots of questions coming in. There's sort of a few around, you know, what is sort of the level of supporting documentation in terms of the time and the cost that it takes to analyse all of this out. What sort of level would be considered sufficient for HMRC? How, you know, how detailed are they going to dive into?
And unfortunately, it's not easy to be prescriptive on that.
No.
Obviously you have to take into context the size of the claim, etc., and how much you'd want to spend supporting a small claim versus a significant value to you. One of the, as I said, depends on if the claim is about the technological characteristics. One of the issues that we're faced is that HM officers, they're not technical themselves. That they won't understand the nuances of your cryptocurrency or your pharmaceutical development or your retail warehouse platform or whatever the case may be. And so explaining to a non-technical audience what are the technical characteristics of your project becomes difficult. And we know that sort of, we've referred to it as a dialogue of the deaf internally, in the sense of sometimes HMRC, they just don't understand what's being discussed here, or they'll do some simple Googling and then think, oh, because Google says such and such happened 5 years ago, it was already established in the marketplace and therefore it can't be R&D. And obviously, you know, there may be circumstances where that's the case, but HMRC, they really have got the context, the technological context for making a claim, and therefore it's one of the reasons why we advocate, rather than those long rounds of correspondence, maybe getting to a meeting between your technical leadership and HMRC so that they can explain to HMRC, hopefully in layman terms, what the projects are. Maybe they'll see some of the context within the projects and understand it a bit better, and therefore it'll give them, HMRC, the confidence to say, oh, I recognise here that the R&D is taking place. But I'm also wary that, as John indicated, it's not just the technological characteristics of the claim that HMRC will be looking at. It may be some of the nature of the qualifying expenditure that you claimed, and they have a number of areas that they're sensitive to, particularly the issues around, say, subsidised or subcontracted activities between third parties, and so it'll depend on the nature of their inquiry as to how much effort you have to do in responding to it. As HMRC, as John's indicated, you shouldn't require extra information in order to support your R&D claim. You're all commercial businesses, and you should all be having good records of your activities, and you should be able to rely on those. I think what is happening is that HMRC probably had an elevated view of the amount of records that sort of young entrepreneurial companies will keep, say, for example, on their R&D projects, and so that there's some aspect where helping them understand the life cycle and the project context is quite useful for them.
And a couple of questions around if HMRC do find fault with a claim, is it just they're seeking to recoup the tax benefit that you've received, or are they going to be dishing out fines as well? And somebody else has asked if they look into it and find there's nothing wrong, are they going to reimburse you with the legal costs of dealing with it? So the answer to that one is no.
Unfortunately not, no.
Yeah, I mean, in terms of penalties, which can be charged if you, I mean, it's the same penalty regime that if you submit an incorrect tax return, that's what we're looking at. So one of the key reasons for getting specialist advice is to make sure that, you know, the information you provide and the responses is consistent throughout the inquiry process. And, you know, making sure that, you know, you distinguish between normally an R&D claim is prepared by an advisor. So, you know, and then the client is, you know, to some degree reliant on the advisor to give them to tell them what the correct position is. So I think with penalties, it's always important to understand that there is a risk, but if you can show that you took all reasonable care, HMRC won't charge a penalty. Even if there was considered to be some carelessness, then you can get the penalty suspended in most cases. So, you know, obviously our first priority is to try and avoid penalties altogether. But even if they did suggest there was a penalty, then you can get it suspended. And in order to do that, you normally have to meet some basic conditions, like making sure that future tax returns are correct and that you meet your normal compliance responsibilities. And that can be resolved pretty quickly. I mean, just to say, Esther, on that question about if HMRC to inquire and would you be able to claim back your legal costs, if HMRC was shown to have acted unreasonably, then potentially you can seek financial redress from HMRC. But I think it's suffice to say that that's quite a difficult and tortuous a task to achieve. So you can do it. We have done it. And you can get something, but unfortunately, often HMRC will only pay out a small amount compared to what your overall costs can be.
Somebody's asked, what happens if you sort of respond to an inquiry and provide all the supporting information, but you still disagree with the conclusion that HMRC come to? Yeah,
I think that's a very good question. Ultimately, HMRC can only give you their view of the matter. If you're unable to reach an agreement, normally what happens is they issue what they call their view of the matter letter, which sets out what their position is, and they invite you to provide further information, or they will issue a closure notice. You can then ask for, if they do that, you can then ask for what we call a statutory review, which is whereby someone from HMRC's solicitor's office, who are the solicitors that represent HMRC, would review the matter seemingly independently to determine whether or not the decision made was correct, i.e. should the adjustment have been made. You can then go for what we call mediation, or ADR, alternative dispute resolution. This has proven to be a really good tool for situations where there is a dispute and neither side can reach an agreement. So effectively, you apply for ADR, and then normally this is undertaken. It's not a face-to-face meeting, unfortunately. Normally, it's over Teams, but you can put forward your case. HMRC have to have a decision maker be present, and we have seen HMRC back down when we've taken it to ADR, because often, as David said, the officers make a decision seemingly because they just don't understand what the technological or scientific advancement was. So in other words, because they don't understand it, they've made a decision that they'd rather make a decision it wasn't R&D than accept the claim. So we have found that when they've brought in their technological or specialists to review the matter, they've actually said, I think you're probably right here. And then they've just they've accepted the claim. So ADR is a very good route to take, and it avoids the final step, which is going to the tax tribunal, which is part of the justice system and it is an independent court which would review the matter. So there have been some R&D cases go to the tax tribunal. Most of the ones we've seen so far haven't. I mean, you know, the early ones really were where, to be honest with you, the claims weren't very strong in the first place. But you can go to the tribunal, but unfortunately, there's quite a significant cost attached. And then the other point to consider is it takes quite a long time to resolve, because at the moment, I think the waiting time for a case to be heard by the tribunal is about 18 months. Now, if you've if you've had an inquiry with HMRC for 12 to 18 months already, you're then waiting a further 18 months. That's like, you're talking 36 months in total before you possibly have got a decision. And that's just the first round. You can go obviously all the way to the Supreme Court if you were so inclined. So it's not, there is that option, and, you know, in the right case, it may well be worthwhile. But obviously, you know, that's one of the things that we would look at. We would say to you, well, these are your options, and then discuss with you what's the best option for you in your circumstances to achieve what you want to achieve.
Somebody's asked me, we talked earlier about you know, HMRC's lack of understanding of a lot of these technological advancements. Somebody's asked, so should we be dumbing down our claims and explaining them in really layman's terms if they've got such a limited understanding of technology? Making it easier for them.
It is difficult. You're sort of caught in a trap in one ways. HMRC, they don't like, say, project descriptions where you talk about the functionality or the commercial nature of the project. They want to focus on the technological characteristics of the claim, of the project, advances and uncertainties, to use the parlance. But when you do describe them, you can quickly get caught up into it. So there is an art to describing it in a sufficiently technological way that you're not going to lose a lay audience. But it is something that I know some claims that they use technology almost to bamboozle the inspector, hoping that they'll sort of bluff their way through. That rarely is successful. You do try and have to explain why something was a challenge, why achieving levels of performance weren't available to you, why integrating two bits of technology was a technical challenge. You know, you do have to describe these if you can in layman terms, but the key thing is that you don't think, well, I won't claim it because I can't describe it. Yeah, that's not the right attitude. HMRC, they can call on some technical expertise. Yeah.
So, I mean, generally speaking, how do we minimise the risk of getting into these compliance checks in the first place? Obviously, you can always be one of the random ones they pick, but how do we avoid being one of the sort of more focused ones they choose to look into?
I think that there are a number of well-established best practices. They're best practices, but they're not necessarily common practices. The key thing is, if we think about some of the areas that HMRC sort of inquire into, is sort of making sure that you have got a good technical story, a good basis for it. And increasingly, we're seeing HMRC focus on the role of, as I say, it's called a competent professional. It's the person who makes the judgment as to whether a project is R&D or not, and they want to understand what are the characteristics of that competent individual, what's their knowledge, what's their experience, what's their levels of qualification, just so that they know that they can rely on that competent professional to make a good judgment. It's important that competent professional knows what's meant by R&D for tax purposes, rather than sort of just assuming it's people in white coats or anything that's technical comes into play. They want to see that competent professional is able to distinguish between the R&D and the routine activities that are going on. So making sure that you've briefed your competent professional is an important aspect on it. As I say, you shouldn't necessarily add in extra records. You should be able to have records on your project activities. Sometimes maybe having, as projects are progressing, try and maybe capture quarterly or maybe milestone-based events. Just capture some of the nuggets of the R&D on a contemporaneous basis, just so that when you do come to make a claim, you've got something that you can go back and reference as to where you saw the challenges were in the project at the time, what was the advances that you were seeking, what were the uncertainties that you faced, and how you were trying to resolve those. So trying to come up with some sort of periodic or event-driven based sort of capture of the R&D characteristics is quite useful. And as I say, then also try and keep your good records of the costs that you've got, your invoices, all of those sorts of things, maybe contracts. Just make sure that they're all readily available, so that in the event that HMRC do ask for them, you can present them through. One of the things that we are seeing is that when companies realise that they're facing that degree of scrutiny, they go back and look at a contract and realise, or look at an invoice and think, oh gosh, maybe it wasn't what I thought it was, and whatever. And so that there are issues there that arise from it. And in those sorts of circumstances, I'm sure John will reinforce this. It's just honest. It's just best to be honest with HMRC and just say, look, we did make a mistake here, rather than trying to perpetuate the mistake and digging in, as it were. You're better off to be open and frank with HMRC if something's going on. But in terms of how you might prepare a claim, it's really about capturing the detail as you go through and trying to present it robustly and succinctly through to HMRC.
I mean, that's the key issue of having an R&D report, isn't it? It's making sure that you've got that information before the tax return has been filed, so that you've got a reference material for HMRC to review. I mean, they put a great deal of stock on whether or not there is a report, and the quality of the report as well.
Something that we will always prepare with for our clients. So as I mentioned, there's a new mandatory additional information form at AIF that describes the R&D taking place and some of the other characteristics that they use for that risk-based assessment. But it doesn't allow you to talk about how you've prepared the claim, who the competent professional is, what are their qualifications, etc. It doesn't talk about some of how you've maybe addressed some of the normal risk points in doing a claim, whether something's capital or revenue in nature, the relationship with third parties. So having a report that addresses some of those points often is useful for preempting HMRC's inquiry.
I mean, time that people spend can form a big part of a claim. And somebody's asked what sort of level of detail of the time tracking do we need to produce to support our claim? For example, is hours per month per person sufficient, or does it need to be detailed specifically hour by hour what they're doing? To what degree of detail? Because it's difficult to substantiate as well, isn't it?
It is, and it will obviously depend on the context. Certainly, at one point, HMRC were not mandating that people had timesheet systems or John and I in professional services firms, we have to book our time every hour to projects and whatever, and obviously consultancies, etc., are used to those sorts of environments. And so where there is those time booking systems, then it's useful to be able to leverage those and to use those to support your claim. not every organisation, especially as I say, young entrepreneurial organisations, need a timesheeting system. There's only usually one project in play, or there's only 2 or 3 people, and people know what they're doing. I mentioned that sort of periodic or event-driven, quarterly maybe, or monthly, or at a milestone. You try and capture who's worked on the project, just so you've got some sort of contemporaneous record of it. But depending on whether you do a monthly timesheet or an hourly timesheet, it'll depend on the context and what you need for your business as much as anything.
Let me just ask, how will this impact those who've applied for advanced assurance?
It would be unusual for something that's come up with advanced assurance, assuming you've had the assurance, to then be subject to HMRC inquiry. That was partly one of the reasons for the claim. Obviously, if the parameters within which that assurance was given has changed, or whatever, it might trick you. It might catch you out. But generally speaking, the advanced assurance, it's not a get out of jail card, but it should sort of preempt some of these things. It's probably worth making a distinction between the advance assurance, which is just a thing that's been running for a number of years now, where before companies make claims that they seek some sort of confidence from HMRC, versus the recent pre-notification of claims that's come in in the last, since April 2023, where you need to notify HMRC that you are intending to make a claim if you haven't made claims in the last years. Or so there's a difference there between a notification, which is almost like a formulaic thing that you have to go through, versus the advance assurance, which is sort of gives you the confidence that your claim will be accepted.
And when we're sort of helping clients with any inquiries that have been made, what are the typical things that HMRC are picking on in the particular areas that we can help with?
Some of them are the old chestnuts, unfortunately. So some of the issues that led to the Quinn first tier tribunal, the mechanism that John was talking about earlier, in terms of the role of subsidised or subcontracted activities. We still see HMRC refusing claims on that basis. And you can see with the new merge scheme that's now come into play for accounting periods beginning after the 1st of April 2024, that is going to remain quite a contentious area in terms of how you determine who gets the benefit when multiple third parties are involved in projects, or there's a supply chain of activities. So that's certainly one aspect that we're seeing HMRC looking at.
What's the sort of the general reaction been to HMRC's approach, a more stringent approach to R&D claims?
I think that obviously we're all UK taxpayers and we welcome the greater scrutiny. I think the issue is not so much that claims are being scrutinised, that's only right. I think it's been about how they've been scrutinised and how HMRC wasn't well equipped to conduct that scrutiny. And so a lot of the anger that's come from the advisory community, from the professional bodies such as CIOT and ICAEW, etc., has been about how HMRC have been scrutinising the claims, the sort of overzealous use of the Schedule 16 sort of preemption or correction of claims, as John was referring to, the belligerent approach that they're taking, the lack of awareness as to what the overall environment is. I think that's been the issue, as much as that claims are scrutinised. As I say, there's hope that they'll start to less and less going forward as HMRC become better equipped, better aware, and have more established processes around making claims. But certainly the way that they've been operating in the last 18 months or so has been quite high-handed and hasn't been conducive to helping the UK economy invest in innovation and grow.
Conscious that we are at the end of our allocated time. That's gone really, really quickly. I don't think we'd anticipated quite so many questions from everybody. So anybody who does have an unanswered question, we will capture those and we will come back to you individually, so don't worry if your specific question hasn't been addressed. But thank you all very much for attending. Obviously this is a real, you know, hot topic for a lot of people, and I think that the message is don't be put off by putting claims in. If you've got a claim, you should still be putting that in. Just make sure you get the right professional help and support with that claim. And obviously if you've got an inquiry from HMRC, then we're here to help you address that inquiry and try and help you make sure that as much of that claim ends up being valid at the end of it as possible. So thank you all very much. Don't forget this was recorded, so please do share with anyone else who couldn't make it. And our next session will focus on expanding your business internationally, and that's on the 16th of May. So hopefully see some of you there as well. So other than that, I will say enjoy the rest of your day, and thank you very much for attending. And thank you, David and John.
Thank you.
Bye, everyone.
Bye.
Cheerio.